And so when China buys US treasuries, what it's effectively doing is depressing interest rates in the United States. It's lowering interest rates over which commercial and household consumers use to borrow money. It's used so as US Treasury rates go down, banks set their interest rate off the US Treasury rate. So as US Treasury rates go down, borrowing for consumers and for businesses also goes down. And when borrowing for business and consumers go down, what's the result? Well, you have businesses able to borrow at cheaper terms and invest money. You have new businesses able to start and get off the ground in new industries, in tech, in robotics, in AI, in software. You have households that are able to purchase homes that they might not be able to afford if interest rates were much higher. So in effect, by accumulating dollars, that's not necessarily a bad thing for the United States, because effectively what China is doing is subsidizing US consumers. Even if you put tariffs on B2B, business-to-business kinds of goods instead of consumers' goods, eventually it does trickle down to the consumer, because the United States importers need to raise the prices on the goods that they're selling, and in turn that works its way through the supply chain so that the consumer ends up paying anyway. And so now what Trump has tried to do is protect soybean farmers from the effects of those Chinese counter tariffs. So by protecting farmers, by trying to protect steel workers in the steel industry, the Trump administration is effectively choosing winners and losers in the economy. That is counter to market-based, the way the market works, where the market will determine which industries should be the winners and which industries should be the losers, rather than the government directly putting its hands on the scales.